Well, shares of Dutch Bros are higher again today after Thursday's 30% surge on third quarter results that beat expectations and featured an upwardly revised forecast. It comes as coffee prices are trading nearly 50% higher over the past year and are up another 4% this past week. What is the impact of all of this and on the coffee chains that sell it? Let's ask Nick Setyan. He's managing director of restaurants equity research at Wedbush. Nick, it's great to see you. I could almost foresee if you blindfolded, well, that's not right now. If you told me coffee prices were going to surge, I might think it would hurt the coffee chains. Instead, it seems to be helping them. Is that right?
You know what? It's actually neither hurting them or benefiting them in the near term. You know, historically, coffee chains have been extremely good at buying coffee in such a way where they avoid the peaks and the troughs. And you know, Starbucks buys at least a year ahead. You know, Dutch Bros, for example, is a little bit more exposed as we go into 2025, but certainly not in Q3 and not in Q4. So, you know, so far, so good.
Starbucks has, of course, been underperforming, but they've got Brian Niccol there now trying to change things rapidly. Could that be a risk to the performance of Dutch Bros and others who I assume have been taking market share from Starbucks, at least for coffee drinkers?
Yeah, long term, perhaps. You know, I just think, you know, Dutch Brothers does what they do very well. You know, I think Starbucks tried to go in that direction, right? So if you think about, you know, bigger picture, the positioning of Dutch Brothers, it's been doing the sort of espresso beverages, the cold beverages, the energy drinks, the non-coffee beverages. In fact, its drip coffee is less than 10% of its business, you know, since its inception. Starbucks tried to move in that direction, and that's what really the complexity of the drinks, et cetera, you know, has them in trouble. And Dutch Brothers only has drive-throughs, and so they can focus on throughput, et cetera, whereas Starbucks has to, you know, the Starbucks baristas have to, you know, take care of the drive-through inside the store, the mobile order and paid pickups. So I just think the complexity the move, the consumer move towards those types of drinks is what's really impacted Starbucks, but Dutch Brothers from day one was made for that.
Nick, I want to go not to the 30,000-foot level, but to the 3,000-foot level, the approximate level of rain clouds. Tell me what's happening. Why are there droughts out there? Is this episodic or something that, as a guy who covers the coffee business, you got to get more used to?
Well, coffee prices have always been cyclical. I do think it's episodic. You know, and again, coffee buyers historically have been extremely good at predicting the peaks, waiting out the peaks, and then, you know, resuming their buys after the coffee prices have declined. And I would be surprised if this time is any different.
So you think you get the drought right now, which is raising coffee prices, is temporary, and they'll come back and won't be a long-term issue?
Especially for Starbucks. You know, they're Arabica, Dutch Brothers, they're Robusta. They're probably not contracted out as long, but they also don't have as much exposure. So it's less than 10% of their basket is coffee. So in each case, I'm not overly concerned.
All right, Nick, thanks for joining us. Nick Setyan, we appreciate it today.